Welcome to the deep dive. Let's talk about that big moment, the finish line in buying or selling a property, the closing.
Right. It feels like just signing papers sometimes.
Exactly, but it's so much more. It's not just the handshake, it's the real legal handover of a huge investment. It's where those homeownership dreams become official, legally secured.
And because it's such a massive thing, the process itself has to be really solid.
Yeah.
You need total clarity, protection from past problems, and someone neutral managing it all.
Totally. So today we're doing a deep dive into exactly that the legal ways property ownership officially changes hands, specifically here in California. We're looking at the mechanics, the safeguards, why it all matters for security.
Yeah, and for this deep dive, we've pulled together insights from, well, a few places. IRS publications that touch on transfers, some core legal guides on California property law, and materials from the escrow and title insurance folks themselves.
Okay, so our mission here is to pull out the key stuff from those sources. We want to unpack the roles of the, let's call them unsung heroes of closing. That's your proof.
The proof, yep.
Then title insurance, the protection. And escrow, the neutral referee, making sure it all goes smoothly.
Yeah.
Understanding these bits is, well, it's crucial for feeling secure about the whole thing. Peace of mind, really.
Definitely. So let's start with the absolute bedrock, the deed. This is the document.
Okay, let's unpack the deed. It's the main legal thing, the official, baton pass of ownership. From the seller, the grantor,
The grantor.
to the buyer, the grantee. Sounds simple, but the sources make it clear this isn't just filling out a form. It needs really specific info to be, valid and recordable in California.
Precisely. The legal primers we look at really hammer this home, missing details or mistakes here.
Yeah.
Big problems later. You absolutely need the assessor's parcel number, the APN.
Right, the property's unique ID for taxes.
Yep. And you need the document transfer tax amount stated, or, if it's exempt, the specific code for that exemption.
Okay, transfer tax.
And one source, I think it was related to the IRS info, mentioned that tax is typically calculated at 1.1% of the market value being transferred. Now, some transfers are exempt, like between spouses, but that 1.1%, that's a real number tied to the value.
Wow, okay, 1.1%. So APN, tax info. What else is absolutely critical on that deed?
The names, non-negotiable. The grantors' names have to match exactly how they appear on the deed that gave them ownership, like letter for letter.
No nicknames or shortcuts.
None. And then the full, precise names of all the new owners, the grantees. This is where you really need to pay attention. The sources stress this. Adding a name to a deed legally makes that person an owner, period.
And changing it later isn't easy.
Requires your signature to change it. It's a big deal. You can't just, take them off later if you change your mind.
That's a huge point. You're creating a legal owner with all the rights that come with it, not just adding them to the holiday card list.
Exactly. And then the property description, not just the street address. It needs the specific legal description. That's usually much more detailed based on old surveys or subdivision maps.
More technical.
Yeah. And one legal source pointed out that even small errors, little ambiguities in that legal description, they can lead to boundary fights or title problems down the road.
Okay, so who's selling, who's buying, exactly which property, the tax stuff. But what about how people own it together if there's more than one buyer? That matters legally in California, right?
Oh, absolutely. And the deed has to spell this out. The forms of title. How multiple grantees hold ownership dictates really crucial things.
Like what?
Well, the sources explain common ways, like tenants in common. Here, owners can hold different shares, say 60-40, and each owner's share can be passed down to their heirs through their will.
Okay, so it doesn't automatically go to the other owner.
Right. Then there's joint tenants. This one has the right of survivorship. If one owner dies, their share automatically goes to the surviving joint tenants. Skips probate court for that share.
Ah, that's a big difference.
Huge. And then community property that's specific for married couples in California. It has its own set of rules for, divorce situations and inheritance.
And I remember seeing mentions in the sources about other ways, too, for trusts or partnerships, LLCs.
Definitely. If the owner is an entity, the deed has to reflect that legal structure. So once the deed is all drafted correctly, but importantly not signed yet, it moves to signing and recording.
And the sources were super clear on this. The grantor, the seller, must sign that new deed in front of a notary public?
Correct. The notary is there to verify their ID and make sure they're signing it willingly. It's a fraud prevention step.
Makes sense.
And here's something people often get wrong. The new owners, the grantees.
Yeah.
They usually don't need to sign the deed itself.
Really? The buyers don't sign the deed.
Typically, no. Their acceptance is kind of implied by, well, accepting the property and allowing the deed to be recorded.
Huh. That simplifies one part of the closing table shuffle for the buyer.
It does. Now, after it's signed and notarized, there's one more key piece of paper for the county. The Preliminary Change of Ownership Report. PCOR, for short.
PCOR, what's that for?
It tells the county assessor, hey, ownership changed. This is essential for getting the property tax records updated correctly. Without it, tax bills could go to the wrong person or be based on old info.
And you need the right form for the specific county the property's in.
Exactly. Each county might have their own version. So deed signed and notarized, PCOR filled out, then both documents head to the county recorder's office.
And getting it recorded is the key step, right?
Yeah, it's the final piece. Recording makes the transfer official public record. It gives legal notice to the whole world about who the new owner is. It really locks it down legally.
Okay, so the deed documents the present and future ownership recorded for all to see. But what if there's a skeleton in the property's closet, something from way back? How do you protect yourself from past problems you didn't cause?
Ah, now you're talking about our second hero, title insurance.
Title insurance. Okay, it sounds like car insurance or home insurance, protecting against future accidents. But you're saying it's different. It looks backward.
That's exactly its unique thing. Unlike insurance for, say, a future fire, title insurance protects owners and lenders against losses from defects or problems with the property's title that already existed before you bought the policy. It's insurance for the property's history.
So not about a pipe bursting next year, but maybe like an old forgotten lien from a previous owner that suddenly pops up.
Precisely that kind of thing. Or maybe an error in a past deed, or an undisclosed heir who claims ownership, or illegal construction done years ago. The sources list things like defects in the title, lien-ins, encumbrances, issues found during the title search. It essentially ensures the condition of legal title the moment you take ownership.
Wow. And how long does this history protection last?
An owner's title insurance policy is usually a one-time premium paid at closing, but the coverage lasts as long as you or your heirs own the property.
For as long as you own it, that's significant protection.
It really is.
Now, during escrow, which we'll get to, I've heard about a preliminary title report. Is that part of this?
Absolutely connected, and it's super important. The title company issues this prelim report early in the escrow process. It's the result of their deep dive into the public records for that property.
So it's like their initial findings.
Exactly. The sources really emphasize reviewing this carefully. It lists any potential issues, liens, easements, restrictions, red flags they found that could affect the title. It tells you what they plan to cover, and importantly, what they might exclude from coverage in the final policy, unless those issues are resolved before closing.
So you get the report, see the potential problems, hopefully clear them up during escrow.
Right, working with the seller and the title company.
And then the final title insurance policy is issued. It protects you against covered issues they found, and maybe even some hidden ones that weren't in the public record but existed back then.
That's the idea. It protects against known recorded issues, unless excluded, and certain unknown off-record risks like fraud or forgery in the past chain of title. Now, the big question people ask, do I have to get this?
Yeah. Is it legally required in California?
For the buyer's own protection, the owner's policy, it's actually not legally mandatory in California.
Right.
But it's very, very strongly recommended. Frankly, it'd be pretty risky not to get it, considering the investment.
Okay, so the state doesn't force the buyer, but what about the bank, if you have a mortgage?
Ah, the lender, yes. Lenders will require a lender's title insurance policy. That policy protects their interest, their loan amount against title problems. They want to make sure their lien on the property is secure.
Makes total sense. They've got a lot of money on the line. So what does this kind of protection cost, roughly?
The cost depends on the policy amount, which is usually tied to the purchase price for an owner's policy or the loan amount for a lender's policy. The sources gave some examples from rate table.
Ballpark figures.
Yeah, just as examples, mind you. Rates vary. But they showed something like maybe $1,500 for a $500,000 owner's policy, or maybe around $2,400 for a $1 million policy. It scales with the property value.
Okay, so we've got the deed as the proof, title insurance protecting the past. But who actually manages this whole closing dance, makes sure the money moves, the papers get signed, everything happens when it's supposed to?
That brings us neatly to our third crucial piece, escrow.
Escrow, the neutral referee. This whole process starts right after the buyer and seller agree on a price, right? when the offer's accepted.
Exactly. Once the purchase agreement is signed, the property goes into escrow. And that process is managed by a neutral third party, the escrow holder or escrow agent, often just called the escrow officer.
And that word neutral is really the key, isn't it?
Absolutely critical. The escrow officer acts as an agent for all the main parties, buyer, seller, lender, but they have a strict duty to remain neutral. They don't represent or favor any one side.
So they're not your buddy helping you negotiate a lower price or telling you if it's a good investment?
Not at all. Their job, as the sources detail, is to follow the written instructions that come from the purchase agreement and any amendments. They handle documents, manage funds, calculate prorations for taxes and HOA dues, and make sure the property transfer happens exactly according to the agreed terms and California rules.
Like a secure vault, holding everything until all the conditions are met?
That's a perfect analogy. Escrow is that secure holding tank. It holds the buyer's deposit, the lender's funds, the signed deed, loan documents, everything. And nothing gets distributed, the deed doesn't get recorded until all the conditions laid out in the agreement and escrow instructions are fully met by both sides.
So what's actually happening during that escrow period? Seems like a lot goes on behind the scenes.
Oh, it's busy.
Yeah.
Based on the sources, first the escrow holder drafts the formal escrow instructions, basically the detailed rule book based on the contract. Then they start coordinating everything.
Like what?
They work with the buyer's lender to get loan documents ready, request payoff figures for the seller's existing mortgages, gather and review HOA documents if there's a homeowners association, and like we discussed, they order and review that preliminary title report.
And this is also when the buyer does their inspections and stuff, right?
Yes, absolutely. And the sources highlight how crucial timing is here. All that due diligence, physical inspections, maybe checking for environmental stuff, the sources mentioned like mold or radon, has to happen within the escrow timeline. Any delays in inspections or negotiating repairs based on them, that's a super common reason closings get pushed back.
And just getting all the needed paperwork together must be a job in itself.
It is. The escrow holder chases down all the required documents. Seller's disclosure forms, maybe a termite clearance report, proof that the buyer actually has the down payment funds. One source specifically mentioned missing paperwork as a frequent cause of delay. Towards the end, they do a pre-audit, basically checking every single item off the list to make sure it's all there before scheduling the final signing.
And the signing. The big loan document stack usually gets signed with the escrow folks or a mobile notary they arrange.
That's typically how it works, yeah. If there's a loan, the buyer sits down, often with a notary arranged by escrow, and signs all the lender's documents. That's a critical step before the lender will actually wire the money.
Okay, sounds complex. Lots of potential hiccups. What did the sources say were the biggest reasons escrows get delayed or, worse, canceled?
Financing issues came up again and again in the sources, top of the list.
Like the loan falling through.
Yeah, things like the buyer not getting final loan approval or the property appraisal coming in lower than the purchase price, which can kill the loan amount, or even just delays in the lender getting the money wired on the closing day. If the money isn't there, the deal can't close.
Makes sense. No funds, no closing. The sources also mentioned different kinds of escrow companies in California. Anything important there?
Yeah, there are licensed independent escrow companies, and then there are controlled or non-independent ones, which might be owned by a real estate brokerage or title company. The advice basically boiled down to check their license, maybe look into their disciplinary history. You want someone reliable and truly neutral handling things.
Good advice. And finally, what about the cost for all this neutral management? Escrow fees cover quite a bit.
They do. The fees pay for their time and expertise in managing the funds safely, handling wires, getting documents, coordinating the signing, preparing the final closing statements, showing where all the money went, things like that. The fee tables we saw in the sources gave an idea of the cost structure.
How do they usually figure out the fee?
It generally scales with the sale price of the property. So, for example, again, just using the source examples, the base fee might be around, say, $450 for a property up to $100,000. But for a much pricier home, over $1.25 million, the base fee could be closer to $1,600. And then there might be extra fees if there's a loan involved, loan tie-in fee, or if it's a more complex deal like a short sale.
So, similar to title insurance, the cost reflects the value and complexity of what they're handling.
Exactly. You're paying for careful stewardship of a very significant, legally complex transaction.
Wow. This deep dive really shows how much is going on under the hood during a closing. It's not just signing your name a bunch of time.
Not at all. We've seen the deed is that fundamental proof of ownership publicly recorded. Title insurance is your shield against the past, against hidden history. And Escrow is that essential neutral manager making sure all the pieces fall into place correctly, following the rules in the contract.
Understanding these three deed, title insurance, escrow, it really shows they're the pillars supporting a secure closing in California. Knowing what they do based on these sources helps you, whether you're buying or selling. And it lets the professionals involved guide their clients better through what's often a stressful, high-stakes process.
Right. And the sources really drive home that while getting the keys feels like the end, the real security comes from all that careful work beforehand. Getting the ownership documented perfectly, insuring against historical problems, and having that impartial third party manage the complex exchange.
It really makes you think, though, doesn't it? Knowing that title insurance exists precisely because weird things can lurk in a property's past, like, forgotten claims, boundary errors, maybe even forgery from decades ago. How does knowing about those potential hidden landmines change how we view the finality of closing, even after the papers are signed and the deeds recorded? Are we ever truly free from the property's history? Something to chew on.